Hey guys, welcome back to the second part of the most common terms of the stock market. So, let's get into the 36th term, which is growth and income funds. This is a type of mutual fund or ETF that has both a history of capital gains, growth, and income generated from dividends, income. Growth and income funds have a two-sided strategy of both long-term growth and short-term income. 37. Growth stocks. A growth stock is a common stock of a company whose revenues are expected to grow at a significantly higher rate than what's average for that industry. 38. Head and shoulders pattern. Not the shampoo thing, but the head and shoulders pattern refers to a specific chart formation seen on a technical analysis chart. It appears when a stock price peaks then declines, rises above that peak and declines again, and rises a third time, but not as high as the second peak, and then declines again. The second peak represents the formation's head, and the first and the third peaks represent the shoulders. It's generally considered to be an indicator of an impending bear market. 39. Index funds. Index funds are investment funds that follow the performance of a specific benchmark or a stock market index like the S&P 500. When you invest in an index fund, your money is used to invest in every company in that index. This results in a more diverse portfolio than if you were hand selecting individual stocks, for example. 40. Inflation. Inflation is the rate of increase in prices for goods and services in the economy. 41. Initial public offering (IPO). An IPO refers to a previously private company that becomes public by selling stock shares on the stock market. 42. Limited order. A limited order is an order to buy or sell a stock at or below a specific price. Limit orders give traders control over how much they pay. 43. Liquidity. Liquidity measures how quickly and easily a stock can be bought or sold without impacting its prices. Cash, for example, is the most liquid asset. No exchange is necessary to gain value from it, and it's already in its most liquid form. On the other hand, a car is less liquid. Regardless of its value, you might have to wait to sell it at its best price. 4. Margin. Sometimes refers to as buying on margin. Margin. Margin is when investors borrow money from a broker to purchase a stock, similar to a loan. 45. A market index. A market index tracks the performance of a certain collection of stocks, often grouped to represent a certain industry. They are a tool for investors to gauge the health of the stock market by comparing current and past stock prices. 46. Market volatility. Market volatility is a measure of how much and how often the value of the stock market fluctuates. 47. Moving average. A moving average is the average price of stocks or other assets over a specific period of time. Generally used in technical analysis charts, it's calculated by averaging data from the previous time periods to help investors identify the current direction of price trends. 48. Mutual funds. Mutual funds are pools of investments from shareholders used to mutually buy securities like stocks, bonds, and other assets. 49. NASDAQ. NASDAQ or National Association of Securities Dealers Automated Quotations is an electronic exchange where investors can buy and sell stocks through an automated network of computers. It is the second largest stock exchange in the world, following the NYSE. More broadly, Nasdaq can also refer to the Nasdaq Composite Index, a stock market index of over 3,300 companies listed on the Nasdaq exchange. In this context, it can be thought of similarly to other indexes like DJIA or the S&P 500. 50. Non-fungible token (NFT). A non-fungible token, more commonly known as NFT, is a blockchain-based financial security. Each NFT represents a unique digital asset. Non-fungible indicates that it can't be replicated or replaced with something else. 51. Order imbalance. An order imbalance occurs when orders of one type of stock are not offset by opposite orders, resulting in an excess of orders for that specific stock and sometimes volatile price changes. 52. OTC stocks. OTC stocks or over-the-counter stocks are securities that are traded on a broker-dealer network instead of an major US stock exchange. They are often used by smaller companies who don't meet the requirements to be listed on a formal stock exchange. 53. Outstanding shares. Outstanding shares refers to the total number of a company's shares that have been issued to shareholders, including restricted shares. PE ratio. Used to value a company, the P/E ratio or price earnings ratio is the ratio of a company's share price to the company's earnings per share. 55. Preferred stock. Preferred stock is a type of stock that combines characteristics of both common stock and bonds. Owners of preferred stock receive different rights. Common stockholders, like receiving dividends before common stockholders, common stockholders, but they generally don't come with corporate voting rights like common stocks do. 56. Price quote. A price quote is the price of a stock or other security as quoted on an exchange. Price quotes usually come with important supplemental information to help traders make more informed investment decisions. 57. Profit margin. Profit margins are used to gauge the profitability of a company. It is expressed as a percentage and is calculated by dividing the company's net profit, total revenue minus total expenses, by total revenue. 58. Recession. A recession is defined as a period of decline in economic performance throughout the economy, generally lasting for at least several months. 59. Risk tolerance. Risk tolerance is a measure of the level of risk you are willing to accept on your investments. Someone with a lower risk tolerance typically sees lower returns on their investments in exchange for lower overall risk in periods of market decline. A Roth IRA is an individual retirement account that allows you to contribute after-tax dollars, allowing you and your earnings to grow and be withdrawn tax-free. 61. Sector. The stock market includes shares from thousands of different companies, which are broken down into 11 different sectors. A sector is a group of companies with similar business products, services, or characteristics. 62. Shares. Shares are the units of ownership in part of a company's total stock. 63. Stock market holidays. While this is not necessarily a term or definition, it's important to know what days you can and you cannot buy or sell the stock within the US stock exchange. In 2023, the observed holidays are New Year's Day, Martin Luther King Jr. Day, President's Day, Good Friday, Memorial Day, Juneteenth, National Independence Day, Labor Day, Thanksgiving, and Christmas. A stock option is a contract that gives the investor the right to purchase or sell a specific number of stock shares at a predetermined price within a specified time period. 65. Stock portfolio. A stock portfolio is an individual's collection of investments, including stocks, bonds, mutual funds, and other financial assets. While a portfolio refers to all of your investments, they might not be contained in one single account. 66. Stock split. A stock split occurs when a corporation increases the number of its outstanding shares by distributing more shares to current stockholders. By splitting existing shares into multiple new shares, the stock becomes more affordable. 67. Time horizon. Time horizon refers to the period of time an investor expects to hold an investment, which will vary based on personal investment goals and strategies. For example, investing in a retirement account like a 401k has a longer time horizon since the funds won't be withdrawn until you reach retirement age. Generally speaking, longer time horizons correlate to more risk potential in a portfolio, and shorter time horizons correlate to a more conservative, less risky portfolio. 68. Volume. Volume is a measure of how much a certain stock or other investment has been traded over a certain period of time. Volume is a critical component of strategically analyzing stock market trends and is often used to determine market strength. 69. Volume weighted average price VWAP. Volume weighted average price VWAP is a measure of the average trading price of a stock or other asset adjusted for the volume. It is calculated by dividing the total dollar value of trading in that asset by the volume of trades. 20. Yield. Yield refers to the income earned on an investment over a set period of time, expressed as a percentage of your original investment. 71. 52-week range. The 52-week range is a technical indicator that measures the lowest and highest price of a stock traded during a 52-week period. Traders use this measure to analyze current stock prices and predict its future movements. Please note that learning to navigate the stock market and stock trade terms for the first time might feel daunting, but consider this as your official first step on the path to developing your investing muscles. Because in the near future, if something works or not, stock market is the only thing, whether it goes under recession or goes high. With this, you can expect unbelievable results. When you come across a term you are unfamiliar with, refer back to my video until you have mastered that term. You will find that learning these stock terms for beginners is more doable than you think. The more time you invest in something, it can be anything in the world, in any skill. If you invest more time, the more confident you will become in doing that thing, or in our terms, you will become a more confident trader or investor in the near future.